How do you look at the question of profitability in a market like this?
Look, the thing I get excited about, and I imagine there's a lot of entrepreneurs out here building in the crypto space, is I don't think about that at a static point in time, right? If you were looking at that just today, and even to your core question that was kind of directed at Hong around OKX, if Hong Kong only allows a certain number of tokens to be traded, that's limiting. I would bet that, well, I don't know what Hong thinks. What I think is that's a starting point. And yes, maybe for the next year or two, it's a small list, and then after that, it'll be wider, and it won't be just be to 7 or 8 million people in Hong Kong. It turns out there's a few, more than 1 billion in that broader community. And look, you're betting on where the world is going to be. I fundamentally believe that where crypto is headed, where blockchain is headed, for a lot of macro factors, the wind is at our back. And if we just look at profitability today, yeah, it's a lot harder to have a profitable business with less liquidity today, prices where they are. That's harder. But if you look at where I think the world is going to be a little bit further out, I'm very excited about what that looks like. Call me the optimist, call me naive, call me all those things. But I've been more right than I've been wrong. I mean, Ripple's in a very good position, so I feel good about that bet. And we're going to continue to invest and hire more people and acquire more companies. Because I believe about where the world is going.
Hey, everybody. It's Eddie from Tokyo. This is your cryptocurrency update from Japan. And of course, that was Brad Garlinghouse. He's the CEO of Ripple. And he was at the Token 2049 in Singapore just a couple of days ago. Now, he's optimistic, and so am I. The reason, well, there are many, but here is one I want to point out. This is the former SEC chair, Jay Clayton. He gets a hardball question that ends up being, I would say, not in the strike zone. And you just shouldn't believe the anti-Bitcoiners because they're wrong. Bitcoin is the one. It's going to be ushered in on a red carpet, and it will take your altcoin to new levels. You're going to have a gain that you can't get in any other sector, except for crypto. I have just one bit of advice. Don't be greedy.
Those places. I also believe that we've decided every legal question around Bitcoin that is relevant. So as I've said before, that would make you think that a Bitcoin spot ETF is inevitable. We know it's not a securities.
Here's a question, though. You were the chair of the SEC. What happened between the time that you were the chair of the SEC and now, where you could stipulate to the idea that we know all the facts around Bitcoin?
Well,
were there new facts that came to light in the past since you?
There were. The classification of Bitcoin when I was chair of the SEC had already been decided when I got there. Okay, that it was a commodity, that the CFTC had regulated it as a commodity. I was very concerned that the trading of Bitcoin around the globe on exchanges that we had no insight into had a large amount of fraud going on.
Right.
And I was not comfortable, and the staff at the
By the way,
SEC
you were proven right.
Yes.
Okay, so now what's changed since then?
So there are a lot of people who do surveillance and the like who are confident that the Bitcoin spot market is what I would say has much greater efficacy than it did 3 or 4 years ago.
Because you've cleaned out the Sam Bankman-Frieds of the world? Is that the idea?
I think it's a number of things.
Finance?
But in the applications that the what I would say is well-respected financial institutions, new financial institutions or new financial providers have submitted to the SEC. They lay out the case for why trading in spot Bitcoin is more efficacious than it was in the Washington.
Let me jump back to Brad Garlinghouse at that Token 2049 in Singapore. He's talking about 10 different central bank deals. Yes, I'm telling you, this company is on fire.
One part of Ripple's business is we work with central banks to issue central bank digital currencies. We've announced about 10 central bank deals. We're talking to a whole bunch more than that. Again, if you had told me, zoom out, if you told me 4 or 5 years ago we would have deals with 10 different central banks around the world to prototype, test, or launch a central bank digital currency, I'd have been like, that is incredible.
There is an argument against CBDCs, though.
I agree with those arguments. But central banks as a customer want to test, they want to evaluate. In some countries will go forward and they will do it. I think it's unclear to me how that world plays out.
Now, I've been saying for quite some time that stablecoins are going to be the next big force of digital assets, influencing crypto across the board with the digital wallets, custody, DeFi, payments, just to name a few. Have a listen, and this is just one more snippet from 2049.
I think there will be more unexpected things, and it's the resilience of the entrepreneurs in this room, and it's the resilience of these markets that it's where my optimism comes from. The one maybe nugget I'll offer there is I think the stablecoin business will be a major topic a year from now because I think a lot's going to change.
You're going to hear from Anthony Ralphs. He's been with Ripple for almost 7 years, so this is a voice that really knows what's going on. And if you're listening to influencers out there that are telling you that this particular digital asset, XRP, is going to go to the moon in the next 1 month, 2 months, 1 year, 2 years, listen to this carefully, and you'll see this is a long-term play.
One of the first things we did with the members of RippleNet was actually work out and say, there's a lot of friction here of moving value from one country to another. How do we help reduce that friction? How do we reduce that cost? And that cost comes from a multitude of different areas. Settlement risk is one that was called out, I think, in the questions. And yes, a bridge asset like XRP can help reduce settlement risk and reduce some of the cost. But it's the operational cost, it's the operational friction, it's the compliance. And so what we did was work with our members. We defined a rule book that all participants of the network signed up to. That created a framework for what was a finality of settlement when you settle between two parties on the ledger. We also created a standard that preceded really the G20 and FSB work on looking at harmonizing the data sets for cross-border payments, because we were seeing all of our parties all had differing regulation. They all had, I think, Tom, to your point, they all had an application of it. But when you tried to do a cross-border payment, as an example, they all wanted slightly different information. And then that was then counter to, well, one country doesn't collect that information versus one needs it. And so what we did was we worked with our members who are all regulated and defined some standards, defined some principles of how data should be exchanged, the format, the structure, and also how do you extend that in the need where you've got a jurisdiction that requires extensions. We see this next innovation of creating this fundamental infrastructure, these platforms that enable new use cases to be built on top of. So when we talk about real world assets or essentially converting traditional mechanisms and applying them to DLT-based solutions, it's how do we help that innovation? And most of it requires a connection of multiple things, maybe a settlement token, maybe an asset token that defines the asset that has the rules of the road around it. So you can't do one without thinking about it in its whole through. So we actually expect maybe in 2 or 3 years for smaller economies, emerging economies, but in the more developed economies, that could be a decade or so. I mean, you look at the RTGS sort of improvements that the Bank of England are doing. I think that started in 2016, 2017, and still going. So some of these programs are very long, and that's kind of that balance that we're trying to achieve here of how do we solve some small problems that allow opportunity to be realized whilst not committing fully, and then allowing that to be gradually phased into a wider societal deployment or infrastructure deployment within a country.
And where do you think that the biggest societal benefits are going to come from? Is this in payments, particularly cross-border payments and remittances? Is it in wealth management? Is it in bond issuance? Is it in the operations of the capital markets? To name just some of the opportunities that the report talks about. Where do you think we're going to derive most benefit from?
Good question. Again, I cite back to the sort of late 90s. We didn't know what the internet would do for us then. We kind of had an idea. I think if I look at it first and foremost, the XRP ledger and the CBDC ledger was designed first and foremost to be a payments rail, essentially. Yeah. And so that's kind of what we were designed for. But everything typically results in a transfer of value or a payment in order to complete a transaction. So we see that first point of just potentially complementing existing systems. What we're also starting to see, though, is new streams of work, that projects that we're getting involved with. So we're involved in a project with the HKMA, looking at tokenizing real estate and releasing equity in the form of a digital token or digital currency. So you start to see these experiments come out that actually will start to reduce friction, reduce cost, and provide more certainty. That's where we're sort of looking at that. These are a multi-year project. I don't think ultimately we're building for my generation. We're building for the next generation with a lot of this technology. And so some of this will just take time to realize and to grow. And there's not going to be a one-size-fits-all solution. There's going to be a hybrid. So there needs to be interoperability. There needs to be consistency and joined up thinking around this. So again, calls for standards and governance and global cooperation is also critical here. Otherwise we end up with walled gardens. I don't know any more than that at this stage, other than we're talking to a whole host of different industry participants who are all looking at how could tokenization and this underlying technology benefit their industry.
And how, as a real technology specialist, to what extent do you believe the technology is now proven and scalable on a global basis, or to what extent are we still in the experimental phase that Danielle was talking about? The need to take very, very small steps.
Again, I look at this as good at two things. From a technology perspective, the technology that we're using has been in circulation and been active for 10 plus years, with billions of dollars of value transferred in there, with minimal disruption or noticeable impact to the usage, with no loss of value. So I look at that and sort of say, there's no better proving ground than actually having something in the wild. Now, that's on one scale. And I think we touched on this about, Daniel also touched about this on the sort of freeways versus town roads analogy. Part of what we then do with any project is to ensure that it will scale to meet the needs of the project and the solution. It's about choosing the technology appropriately for the problem you're trying to solve for. It's a bit like, if you want to go to the shops, do you buy a Ferrari or do you buy a station wagon or an SUV because you can put all the week shopping in, or are you reliant on putting one bag in there? So it's about choosing the appropriate tool for the job. And then it's a case of managing that change, testing, rolling out, and doing that scaled process. That's how we approach all of our projects here at Ripple. So the most recent one you might have seen in the press with Palau, we did a limited pilot to basically prove that people could go and use it to pay for goods and services in restaurants and stores in and around Palau. Not just from a, could I spend the money, but what happens if I go to one of the islands in the state, in the nation, and do I still get the same service? So it's all these sort of fringe edge cases that you need to account for to provide certainty. And that comes back to the point of trust. If people don't trust it, they won't use it. So we have to take this very slowly, but grow and evolve this. And that's our approach.
I always stand amazed at the vast number of pilots that are taking place in beautiful island economies.